On The Moat Show, we uncover the companies with economic moats, one stock at a time, by bringing on analysts from Morningstar to share their in-depth insights with you.
Hello, and welcome to another episode of The Moat Show, where we uncover companies with economic moats by bringing on analysts from Morningstar to share their in-depth insights. In this episode, we'll be discussing Masco with Brian Bernard, who is Director of Industrials Equity Research at Morningstar. Thanks for joining today, Brian. I'm excited to have you on.
Yeah, thanks for having me.
To begin, I kind of want to talk a little bit of background. For our viewers who may not already be familiar with Masco, can you provide a brief overview of the company, the market it operates in, and some of the key milestones that have led to their current position as the leader within the market?
Yeah, definitely. So Masco has been around for quite a while. Actually, it was founded in the 1920s, but it began as a machine parts manufacturer for the auto industry. It didn't enter the building product space until the 1950s when the founder acquired the rights to a single-handle faucet design. And that was the start of its Delta Plumbing Products brand, which is well known today. And then over the subsequent decades, they expanded into other adjacent building product categories. They got into cabinets. That the first acquisition was in the 1980s. Then they got into installation and services and paint in the 90s. Behr Paint was the big acquisition in 99. And then windows in the 2000s. More recently, they divested some of those businesses. They spun off the installation and services business. That's now called Top Build. It's a publicly traded company. That was in 2015. They spun that off. And then about 5 years ago, they sold their windows and their cabinets business. And so now they're left with two segments, the plumbing segment. And then the other segment is their decorative architectural segment, primarily the Behr Paint and coatings brands, but also they have some builder hardware. And they did a lighting acquisition. Kichler is the brand there. So yeah, that's where we are today with Masco.
Well, that's great. I didn't realize they had been around for so long. And I certainly have some of those products in my own home. So it's interesting. From a, sort of investment style, many investors today, they like to view companies through sort of a growth or a value style lens, if you will. So, given that Masco is a common name in some of the Morningstar value style indexes, can you briefly explain the types of characteristics that a value-oriented company like Masco might exhibit?
Yeah, so it's it's definitely a mature company. It's primarily tied to the U.S. repair and remodel market. That repair and remodel market over the long run grows at kind of a mid-single-digit pace. So you wouldn't expect outsized growth numbers from Masco. In fact, over the last 10 years, revenue growth has averaged roughly 5%. We expect similar top-line growth over the next 10 years. A bit faster earnings growth. Obviously, there'll be some operating leverage on that volume growth and share repurchases. So from a growth perspective, that really kind of, I think, falls more in that value. And then if you look at historical valuation multiples, I think that puts the firm squarely in the value category as well. You look at the 5-year average forward price to earnings and the EV/EBITDA multiples; those are 15 and 12 respectively. So again, usually you don't see too demanding valuation multiples for Masco.
From a competitive perspective, I know when I walk through my local home improvement store, there's seemingly countless options in terms of things like plumbing and lighting fixtures and paint. Can you explain a little bit about how Masco has been able to stand out from its competitors and how it's achieved one of Morningstar's most exclusive ratings, a wide moat rating?
Yeah, absolutely. So that wide moat rating, we do assign that to both segments. So again, that's plumbing and the decorative architectural. The primary moat source would be the brand intangible assets, primarily for Delta and Behr. That brand intangible assets, in our view, supports leading or near leading market share for those brands and pricing power. When I say pricing power, quantitatively, what that means is, we've observed over time that Masco has been able to increase prices more than inflation. That supports profit margin stability. Put another way, with the power of that brand, they're able to price higher than a lot of the brands. Consumers are willing to pay a premium for those branded products. Just kind of digging into that intangible assets a little bit more here. How do you get that? It's really a history of manufacturing differentiated, innovative products that consistently have better aesthetics, functionality, durability than much of the competition. And, when you can deliver that year in and year out, that really supports strong relationships with their trade partners, their big box retailers, for example, and their wholesalers, and also customer loyalty. Speaking of loyalty, if we look at the latest builder brand survey from Zonda, which is a good survey to kind of just see how brands are ranked from builders and contractors. Delta enjoys very strong brand familiarity with the trades. Really, along with the other leaders, Moat, which is owned by Fortune Innovations, and Kohler, which is a private brand. And just so you know, just over half of that plumbing business does go through wholesale to the trades. Then if you look at for plumbing, a little bit under 20% of that is retail. The rest of that is going through e-commerce or dealers. But for that retail, next time, like you said, when you're in a big box retailer like a Home Depot, Lowe's, Menards, take a look when you're in the plumbing section, looking at faucets, shower heads, and just take note of that shelf space for Delta. I mean, you're going to see very strong shelf space for these products, along with Moat and Kohler. Again, those are their main competitors, but they're going to have far more products available than lesser brands like American Standard or private label. With the Behr paint, going back to that survey, again, that gets very strong results with the trades. For familiarity, most used brand really only trades Sherwin-Williams, which is very strong within that trade group. But a little bit different than plumbing is that Behr, the paint is mostly do-it-yourself. And from that perspective, they get very high marks from Consumer Reports, a lot of times getting ranked higher than Sherwin-Williams. So that really, really supports that brand. One thing that's unique about Behr paint, though, is that in coatings, is that it's exclusive to the Home Depot. This is a relationship that really has existed since the Home Depot began in the 70s and only had a couple stores. We think that's a symbiotic relationship, right? I mean, Home Depot likes it. It has this very strong brand, can take market share in both the do-it-yourself, but they're making a push for the professional as well. And we think that does actually have a cost advantage for Masco relative to competitors, because their competitors, Sherwin-Williams, PPG, Benjamin Moore, they have to build out this expensive store footprint to really kind of get more of that professional market, whereas Masco really can rely a lot of that on Home Depot, especially like their own logistics. They've built their manufacturing distribution around the Home Depot's world-class distribution. So we think overall that really kind of drives a cost advantage for Behr. And then, before I finish on the Moat, just one thing that's interesting is that before 2019, we actually had a narrow Moat rating on Masco. And that's because, remember, back then they had the cabinets and the windows businesses. We thought that those were no Moat businesses. They didn't have that differentiation. They were more cyclical. It really sort of diluted Masco's overall competitive position on a consolidated basis. But then, like I said, they sold those businesses. And after that, we're left with really the two crown jewels of the business. And we upgraded to a wide Moat then.
Yeah, that's really interesting. When I think about Masco as a company, the name Masco doesn't really resonate that much for me. It doesn't stand out. But then when you think about the brands underneath it, Delta plumbing fixtures and whatnot, Behr paints. Those are brand names that I know, and I imagine probably many people in the country know as well. So it's interesting to kind of view it, that such brand recognition, underneath sort of the layer of Masco. Moving forward a little bit, I want to touch on something you had just kind of mentioned here as regards to, the spinoff or the sale of sort of their windows market. In one of your reports, I read you mentioned future acquisitions and how that could be a potential, dilute, if you will, of the firm's moat over time. So kind of, what are your views on Masco's acquisition strategy? And, should the company, how should the company balance growth, through acquisitions versus, more organic growth of brand names that they already own and operate in?
Yeah, it's a good question. In our view, a company that's very acquisitive, there is a heightened risk of the potential to dilute the moat. If they're buying no moat businesses, or they overpay, or there's execution issues. And right, like we just talked about for Masco, there was a history of that, right? We had that narrow moat rating because they got into that cabinets and window space. But I would say, since those divestitures, Masco has been generally, I would say, more disciplined. They've made acquisitions, but they're more smaller bolt-on within adjacent products. Between 2020 and 2023, they made a handful of acquisitions, again, mostly in kind of plumbing, nothing going, into a new product, completely new product category. They spent $400 million over that time frame, which, to put that in perspective, that's roughly 1% of sales over that period. So I would expect them to continue to make these small bolt-on acquisitions. I think it's important for them to, to help with their growth strategy, to continue to expand that plumbing product set and expand its international footprint. I mean, certainly you're going to need some help with M&A to do that. But I don't see it as really too much of a risk when you're making those types of acquisitions. And like I said, though, it's going to be a part of their strategy. Management put out long-term financial targets, and part of their growth algorithm is acquisitions. They expect to add over a long run 100 to 300 basis points from acquisitions. So again, it's going to be a good driver of growth. But again, if they continue what they're doing, we're not overly concerned there. But to take a step back, just looking at their overall capital allocation strategy, I would say it's been, especially under the current management team that's been around for over a decade now, it's been balanced. I would say it's actually, it's shareholder friendly too, because if we look over kind of that time period, we calculate that really, 70% of shareholder capital has been allocated via dividends and share repurchases, 25% of capital expenditures, and then really only a small amount, 5%, has gone to acquisitions. Now that's net of divestitures, right? So that cabinets and the windows kind of brings that down a bit. But again, it's shareholder friendly. I'm not too concerned about the acquisition activity, and I think they'll remain disciplined. I'm not expecting anything unusual or them to stray from that strategy going forward.
Zooming out a little bit, I want to maybe take a look at the bigger picture of housing in the U.S., since that's sort of been a big theme here over the last few years. Where we've seen higher home prices, higher mortgage rates. And that's really kind of created a challenging environment in terms of, home affordability. And so I want to hear your thoughts on how have these factors impacted Masco's business strategy and their operations? And how do you see these factors evolving going forward?
Yeah, another good question. So to answer that, I want to give viewers understanding of what the business model, where they have most exposure. So their most recent disclosure is that 88% of their revenue is tied to the repair and remodel market, the remaining 12% to new construction. So repair and remodel spending is far less cyclical than new construction. As I said earlier, it's grown at a mid-single digit pace over time. When we have a downturn, there's starting to be it'll drop, but you're not going to see big gap down like you do for construction spending. Conversely, though, during recoveries, you're not going to see outsized kind of rebounds. But it's a nice steady business. And then one thing we like about Masco, especially during uncertain economic times, is that within that repair and remodel category, their products skew more towards lower price points that have somewhat of a break-fix dynamic, or to put it another way, they're less discretionary, right? So like, again, we think of things like faucets, shower heads, paint. These aren't really expensive items. And the comment on the break-fix, right, is that faucets breaks, shower heads get kind of gunked up over time, right? Paint fades, or maybe, kids throw juice on the wall or something, and you need to address that. So again, there's a component of that's less discretionary. There's other manufacturers that have high R&R exposure, but they're manufacturing decking, cabinets. I mean, those are the type of things that when you have uncertain economic kind of outlook here, people are going to defer that. So we do like that category. We think that it makes them more insulated from downturns now. That being said, last year, organic revenue did decline 8% for Masco. I mean, we saw softness across both residential construction, obviously, but repair and remodel spending also softened as well. New construction spending, that's clearly been affected by poor affordability, right? Home prices are still historically high. Mortgage rates, have more than doubled. Now they're kind of sticking around 7%. So that is really sort of curtailed that market. Although there's I think there's some real bit optimistic on new residential constructions and single family, but certainly there's been an impact there. And then if you look at repair and remodel spending, that's been negatively impacted by lower housing turnover. So what I mean by that is there's been fewer existing home sales, right? And think about that, and what's been driving that, one of the main things here is that, like I said, with the mortgage rates going to 7%, the majority of homeowners have mortgage rates below 5%. So it's what we call that rate lock-in effect. They're discouraged from putting their homes on the market. So that's been a headwind. I would say with the inflationary environment, I think consumer confidence has kind of taken a hit. And you also have to remember that we're just facing very challenging prior year sales comparisons. Repair and remodel spending just surged during the pandemic years. And so I think we're seeing some normalization there. Now, for 2024, management is expecting roughly flat revenue growth, and that's based on the North American repair and remodel market that's flat to down low single digits. We're a little bit more optimistic. We forecast 2% revenue growth in 2024 for Masco. We think that the repair and remodel market will modestly surprise to the upside. When I say that, I'm talking like 1% growth, but we're seeing some signs of stabilization. We're hopeful that maybe we've hit the trough with existing home sales. Net turnover will And it's not going to get much better, but could be better than what it was last year. So I think that's a bright spot. And then single family new construction, again, that's it's only 12% of the business, but it's still that there's still some it's still important for the business. We think there's going to be 4% in single family starts this year. The fact of the matter is that home builders have they've lowered prices. They're putting in sales incentives. They're doing mortgage rate buy downs where you can get a mortgage rate that's 200 basis points below the prevailing market rate. So that's what we're looking for 2024. And then if you look longer term, we're more optimistic that, single family starts. We think we get a rebound in 2024, grows in a mid-single digit percentage over the next few years. Multifamily, I didn't talk about that. That's going to be down pretty big this year because we have just a ton of inventory being delivered. But, I think you're going to see a year where that really kind of settles down. But I think, again, you're going to see multifamily return to growth just because that is, we have an undersupply of affordable homes. A lot of times, that is a more affordable option. Kind of a question mark where immigration goes. But if that is a driver, that'll be another catalyst for more multifamily construction. And then just, our economics team sees lower interest rates over time. That'll help there. So, but multifamily is not that's still not a big portion of Masco's business. And then finally with repair and remodel spending, that's the big driver there. We think that that's going to return to mid-single digit growth here over a longer run. There's several long-term secular tailwinds. Aging housing stock, right? The median home is now over 40 years. So you're going to have more projects, favorable demographics, right? Increased acceptance of smart home, energy efficient products. You're seeing some of that more kind of smart type products for Masco's plumbing products. So you take that all kind of together. We think that repair and remodel market's going to be good growth over the long run.
You mentioned the home repair and remodeling accounts for the majority of Masco's financial performance. So I kind of want to get your view on what the outlook for that segment is and sort of your views around the growth prospects for Masco in the next few years.
Yeah. So like I said, a lot of their growth prospects tied to that repair and remodel market. We forecast that they're going to grow at a mid-single digit percentage over the next 10 years, outperforming that repair and remodel market by 100 basis points. So how do they outperform that market? There's a couple key growth initiatives that we're really excited about for the company. The first is with the Behr paint. Like I said, that's a leader in DIY, right? Do it yourself. But over the last 10 years, they really shifted towards that professional market share. So they started with no market share. Now they have 10% market share. So they're really gaining ground there. And I think their sweet spot with that professional market is really less your pure professional painter. I think they can get some market share there from the Sherwin-Williams, the PPG, et cetera. But I think the sweet spot there is really going to be with your general contractor that does, all sorts of things in the homes and is going to the Home Depot and is buying a basket of diversified goods. So they're picking up, lumber, tools, and paint. So I think that's a nice growth driver for that business. And then within plumbing, I think we're going to continue to see them moving into, I think I mentioned this earlier, but moving into adjacent products and growing internationally. I think that's where that M&A is going to be important, where you're going to see bolt-on acquisitions there to help get there. But I think those are kind of the drivers that really are going to help Masco outperform that repair and remodel market over the next decade.
Great. That's fantastic insight into sort of where they sit now and kind of, what might come in the next year or two. So sort of last, I also want to hit on, beyond growth, which we kind of just discussed now. I also want to hit on sort of some of the risk and uncertainties out there that you see. So, what would you say from your perspective, is the most significant risk or uncertainty facing Masco, in the near term, medium term, and how do you, view the company and how positioned are they to sort of manage these risks?
Yeah, well, we talked M&A risk. Again, I think it's something to keep an eye on, but I'm not too concerned there. I mean, look, the biggest risk is if we have a prolonged downturn in that repair and remodel market, right? I mean, they're going to feel the pain if that happens. Now, again, they're better positioned than some of these companies that are more focused on those big ticket discretionary products. Like I said, cabinets, decking, for example, but that's the biggest risk for this company. One thing I want to say though, is that when we do have these downturns, especially when we have downturns more tied to new construction, a lot of times you'll see home builders will sell off. Investors are concerned about affordability, mortgage rates going up, and you'll see Masco gap down in line with the home builders, which I don't think, and this has happened several times since I've covered the company, I don't think that should happen, obviously, with that repair and remodel exposure. So I think that when you see that, that's an opportunity for Masco. So I'd say that's the biggest risk. One other thing that comes up I would like to address is that, we talked about the exclusive relationship with the Home Depot, and there's some clients that'll say, "Oh, wow, that's like extreme customer concentration, right? What happens if they decide to go with Sherwin-Williams, for example, or they're concerned that there's PPG products there? What about the competition there?" And I'd say, look, I mean, the Home Depot, I think, very, very much likes that they have arguably the top brand in DIY, right? Yes, they do have PPG products, but if you go in the store, walk in there, you'll see that there's far more shelf space for Behr, and I think you can tell that there's just more investment there. So I don't see that as a risk, but that does come up.
Interesting. Well, Brian, great. With that, we're pretty much out of time. But it's been a fantastic conversation. So thank you again for sharing both your time and your insights here with us today, Brian. And thank you to all of our viewers as well. See you next time on The Moat Show.
Thanks for joining us on The Moat Show. If you enjoyed this content, consider subscribing to our YouTube channel. Got questions, comments, or suggestions? Let us know in the comments section below. To receive the latest Moat investing research in your inbox, go to vaneck.com/subscribe and select Moat Investing.